What is good, everyone? Welcome back to another video sponsored by PrimeXBT. Today we're on the PrimeXBT platform and I'm going to be giving you a sort of midweek outlook. Since we have CPI tomorrow, I am expecting volatile price action. And right now, I want to give you a little outlook so you can avoid certain conditions and you know what I'm looking at ahead of CPI. Okay, so you can see here we're on the Nasdaq. And if we zoom into this bit of price action here, we're on the daily chart, okay? You can see we've had a strong push down, but we left equal lows down here, okay? These lows are still intact. The lows made in the month of May, at the start of May, are still intact, okay? We came down and we left equal lows at this point. What we have done now is had what I call a healthy retracement. Okay, if we are to keep these lows intact for now, then we need a retracement and a rejection. But I want these lows taken out eventually because retail market sees this as the bottom. Okay, so right now, if we zoom into this, we are trading about to touch an order block. Okay, this is an order block. Why? Because we have a swing high taken out and this rebalanced this imbalance here. Okay, this rebalancing the imbalance and then pushing down created a fair value gap, a volume imbalance on the futures chart, and this order block, which we are trading inside just now. Okay, so this level here is our order block. The daily order block I want to see a reaction from. So once we touch this, I want to see structure build down. Okay, now CPI is usually a one-sided move. So if we miss this and start to come down here, I would expect CPI to just move up and probably take out the liquidity above the high. But what I want to see is us push into, reject, and then drop during CPI. That is ideally what I want to see. Obviously, I'm not going to have no skin in the trade because I don't trade high impact news like CPI. I wait for that to pass and trade afterwards. I may scalp afterwards. I may do something else. Okay. But today's price action was really clean up to the volume imbalance, okay? Up to the daily order block, I should say. That's our order block, remember? And what we did before trading into the order block, we took out sell side liquidity. New York midnight is around here, okay? New York midnight is somewhere over here. We ran buy side liquidity over on this level. Ran buy side, ran sell side, creating a range, okay? When we started to rally up in this range, we're still in a discount at this point, okay? If we zoom in, you can see lots of down close candles traded above and used as support. We rally again, fair value gap. Remember, displacement, fair value gap. It shouldn't come back down here because we're in a rush to get somewhere. And this is around 50%, okay? Then we run up and take out buy side liquidity. So we use this fractal as our dealing range. High to low, 50% is around here. If you took 50% and drew it out, all of these opportunities down here are buying opportunities. Why? Because we have logic. We have the daily order block, which we want to trade into. We've taken out buy side liquidity and sell side liquidity. But the last sellers or buyers that were taken out were sellers. So we've still got buyers in the market and people wanted to buy above this high. You've got sellers from down here. Everyone who was selling in this price leg, who got lucky and caught this price leg, where would their stop loss be? Above this high, right? So when we're starting to give impulse legs up, you can predict this to be the bottom because we've swept sell side liquidity after sweeping buy side liquidity. Now sellers are trapped. As we run up, we are constantly squeezing sellers towards the high. Their stop loss is trailed, okay? Every time we squeeze up, we're squeezing the sellers out. It's a typical short squeeze. This is what the retail markets call it, a short squeeze, but this is an actual short squeeze where we have people trailing their stop losses, and as we're giving impulse legs up, down close candles are being used as support and giving us price legs higher. That is short sellers being squeezed, and that is my Nasdaq outlook. What I want to take a look at now is DXY. So if I head over to, I'll take a look at the Euro chart actually. If I head over to Euro USD, and on the daily chart, you can see we've been in a range high to range low. Take this range and measure 50%. 50% eyeballing it is around here, okay? We're just trading above it right now. Remember, I want to see Nasdaq trade lower. I want DXY in the long term to trade higher. Currently, we are working inside a fair value gap, or working around a fair value gap, I should say. Okay, if I change the color of this so it's easier to see, you can see we're trading inside a large fair value gap, and we're about to touch it again. What I want to see CPI do is drop from here, ideally. Obviously, I'm not going to have no skin in the game, so there's no risk to me. But I would ideally like to see it. Again, this wick is a gap. We've got an actual gap, so we may even trade above this one more time as we've begun to consolidate. We've had an expansion, retracement, consolidation. We should expand, and we can't reverse yet. So we have to get another expansion before we can reverse. I'm expecting CPI to reverse. Long term, I want these lows down here eventually. We may not get that from CPI, but I want us to start building structure towards this. That's exactly what I'm looking for. Lots of resting liquidity. If we actually draw a trend line across here, if you took this, if I move that down, you took that, you can see from here to here, there's a trend line of liquidity. We like to use these trend lines to to confirm our ideas. If you can draw a trend line across your targets, that's a really nice sign, because obviously retail see that as support. If we're shorting and you can draw a trend line across your targets, then likely there's lots of resting liquidity below there, because they see it as support, and that's where they will be putting their stop losses. Okay, and that is pretty much what I'm looking for. I wanted to give a sort of demo of what the PrimeXBT platform looks like on the actual charts, and as you can see, it's really easy to use. It's a great execution platform, and like I said in my partnership announcement video, a really solid company with solid reviews. I only really work with solid companies. If I like their business plan, then I work with them. Okay, and as you all know, PrimeXBT are a solid company. With that being said, that brings us to the end of the weekly outlook. There's a few little gems in here that you can sort of take away and put in your notes. I wanted to make this video for you guys who are interested in PrimeXBT and show you exactly how to use the platform, how you can mark up the charts to fit your liking, and no matter what you trade, whether you do trade ICT or you're just a fan of mine and trade, you know, retail, support and resistance or other things, the main thing is risk management. As long as you have a strategy and risk management, you can make money trading anything. Of course, I'm biased. I think ICT is the best way to make money, but risk management is always number one. You can flip a coin and be profitable if your risk management is A+. So with that being said, quick PrimeXBT video. I will be working with these guys more in the future. If you want to see some live trades with them, possibly some swing trades given, then please do let me know and reach out to those guys as well, saying you want some live trades with me, etc. And yeah, thank you as always for watching. I will catch you guys in the next video tomorrow.